Hello everyone, welcome to ELI, the place where you get your daily dose of inspiration for entrepreneurship. And today we have with us Mr. Tashwinder Singh, who is the MD and CEO of Niyogin Fintech. Hi, Tashwinder, welcome to ELI.
Hi, how are you? Thank you for having me on.
I would request you to introduce yourself to our audience and give us a brief about what is Niyogin.
Hi, everyone. I think the introduction's already been done. My name is Tashwinder. I'm the Managing Director and CEO of Niyogin Fintech. It's a new age company, started in 2017. I think the mission that we have is to try and find ways and means to solve multiple problems, right? The first of which is to solve the last mile financial inclusion problem in the country. And I'll describe this in a bit detail. The second thing that we look at are the MSMEs, and to try and provide all financial services to MSMEs who are not necessarily able to get this through the formal channel, including credit. So these are the two main things that we focus our energies on. In the first part that I mentioned, we are looking at solving the financial inclusion problem. I'll give you a little background. You see, government of India, when they went through their Jan Dhan Yojana, exercise, what was called the JAM Trinity, they basically opened accounts for every adult Indian. And when every adult Indian opened a bank account, the motivation was that everyone should be into the formal banking sector. So just to give you some numbers, 430 odd million new accounts got opened, which was a fantastic exercise, by any yardstick. I mean, just to give you an example, the US population itself is 330 million. So we opened 440 million new bank accounts, right? Which basically made sure that every adult Indian basically had a bank account. The problem that was to be solved, which was not solved, is how do these customers get served? Because you do not have the physical infrastructure, which is the banking physical infrastructure, to serve so many customers across so many pin codes, across so many locations. And mind you, a large number of this population was in rural India. About 750 to 800 million people live in rural India. So these new bank accounts were largely people who were marginalized and were not having formal bank accounts. So our motivation and our mission was that let's try and find the mechanism to provide access to banking for this client set and use the existing infrastructure of Kirana stores, retail stores, etc., and use them as potential channel partners for delivering banking services. But that required the use of technology to enable those Kirana stores to effectively become like a bank, right? I mean, in terms of being able to provide all the services and providing that last mile connectivity, the technology, the switching capability, the product capability, etc., has been our mission. And that's one of the main things that we do. Now, when you start dealing with these Kirana stores, and just to give you an idea, at last count, these numbers were something like 63 million retail stores in the country.
Wow.
You suddenly realize that there is a significant lacuna of credit. India is generally a deeply capital-starved economy. And as you go down the chain into these MSMEs, you find that the starvation is quite acute as far as capital is concerned. So finding ways and means for delivering capital to this chain also became an important element of our mission. And as you know, we also are an NBFC. So we are able to use our NBFC, non-bank finance company, and use our technology company, which is iServU Technologies. And both these companies come together to provide solutions to the MSMEs, eventually serving the end customer, who is anyway a marginalized individual, could be a migrant labor in an urban city, or could be a rural Indian who's a farmer or what have you, who does not have access to banking or does not have the confidence. We try and provide the confidence by making sure that there is a neighborhood bank available to him in the form of his local Kirana store, which is effectively becoming a bank. So we basically own the technology, we own the last mile technology. Now, all of this rides on the India stack, which the government of India created, right? So we provide the connectivity to India stack, and then there are banks at the other end, which are effectively being extended from our technology, right? We're extending the banking capability into this network. So that's in a nutshell what we do.
Got you. So these Kirana stores you just spoke about, how do you make sure that these people serve as a bank? That means they will need certain training, certain understanding of how banking systems work, and then they can extend that service to other people.
Yeah, so they are not banks, right? They are not banks. They are effectively what you call as correspondent agents, which again RBI had allowed correspondent agents to operate when they wanted bank accounts to be opened. But after all these bank accounts being opened, right, the correspondent agents don't have much work to do if they were just to open bank accounts.
Mm-hmm.
So therefore, getting them into transaction execution became a critical part for their own existence and for their own revenue generation, etc. Right? Now, what it does is it requires the ability of a very simple method of doing this. The more complex, you have to understand, as we go down the food chain, right? The systems cannot be complicated. The user interface cannot be complicated. It has to be simplistic and easy to use. So what we've done is we have an app and a web-based solution which a Kirana store can download on their phone, right? And most of this is Android phones, right? So it's basically an Android app which you can use, and that Android phone connects directly to our network, right? And it's a very simple app that you need to download. And once you've got yourself registered, you're ready to do business. So it doesn't take too much to do this. You potentially may need a small device incremental to your app, which is used for authentication, which could be a biometric authenticator, fingerprint reader, or it could be a card authenticator, which could be a card reader, which are all very small, simplistic devices. They don't cost too much. They cost anywhere between 600 rupees to 1500 rupees, which the Kirana store has to invest in if he wants to get into this business. And the Kirana store, as he's delivering these services, is actually making money. So our philosophy also is to make sure that our products are income augmentation for the Kirana store. For every transaction that gets done in the Kirana store, we are paying the Kirana store because we are being paid by the banks. Effectively, we are serving the customer of a bank. And therefore, the bank pays us and we share part of that revenue with the Kirana store. So for the Kirana store, it's a new source of income. So think about it like what happened in, when the telecom revolution happened in India in the 90s, when there was a telephone that was put on every panwala, right? And you could go to and make an STD phone booth without, making those long trunk calls that used to happen in the old days. Today, we want to bring that same revolution in the world of banking. Why should banking be restricted only to banks? Why should a customer not be able to walk into a Kirana store and do everything that he or she can do inside a bank and feel secure to be able to do that? And the only way to deliver that is through technology. Sure, there is training required, but if your technology is a strong enabler, then the training requirements will get reduced materially. And that is the philosophy that we work with. That technology should be simplistic, straightforward. User experience should be straightforward. So at that level, you're not talking about doing complex banking transactions. You're not talking about doing complex, derivative transactions on foreign exchange. You're just talking about simplistic transactions, access to banking, withdrawal of cash, deposit of cash, applying for a loan, applying for opening a new bank account. Very basic, simplistic banking transactions, which were not available to this population because of lack of distribution, lack of ATM network, lack of branch network, etc.
Speaking of technology, can you tell us what technologies or what technology stack is in the background? Is there a play of AI and ML, and how does it
So this is
integrate with
not This is not AI or ML at play. This is basic technology that is integrating with NPCI. So Government of India has created National Payments Corporation of India, which is the central body for clearing all payments, right? So all transactions need to get routed through NPCI. NPCI has more than 400 banks that are integrated with NPCI. So it's messaging technology which picks up a transaction, authenticates the transaction, sends it to NPCI with a switching capability. NPCI then routes the transaction to the bank to which it has to go to, depending on which bank the customer has his account with, and that's how that gets done, right? So this is not AI yet, right? I think there are some interesting opportunities that can come up when we bring in the next round of technology changes that we would bring in. But the idea is this is not e-commerce where we are trying to look at consumer behavior and trying to recommend to customers what they should buy or what is right for them, right? This is a simplistic transaction that is being initiated by the consumer, where he wants to either withdraw cash from his bank account, or he wants to deposit cash, or he wants to open a bank account and what have you. We want to make sure that journey is seamless and happens in split seconds. Right. So if you really think about it, because we are not operating in, the most modern urban locations, right? We are operating in rural locations where you are starting out with technology as the enabler to get basic banking access to people. So one needs to they take that into account. But as people get more comfortable, as people get more used to using apps and using their phones in rural India, the phone proliferation is also not as good, which is why the Kirana store becomes a hub for doing these transactions, right? But as UPI is becoming more prevalent, I think it's creating some interesting dynamics for us. We had more than 20 million customers that used our app last year, right? Where they actually did a transaction on our app. So if you start looking at the reach, the footprint, what one can do with that data that one is collecting, I think there are some very interesting outcomes that will come up in the future.
Hmm. So, just curious, in a typical retail banking setup, there can be hundreds of services that you can offer. But tell us, what are some of the most common use cases that you see that customers are, using your platform to do
So
something?
the most common use cases are domestic money transfers, which is actually used by a lot of migrant laborers when they get paid in cash and they want to transfer that money to their mothers, their families from the villages that they come from. How do they transfer that money? Because they're sitting in an urban location, their bank accounts are not in the urban location, right? And they are not necessarily welcome in any bank, right? In any case, right? We don't have lines of migrant laborers. Plus, they can't afford to spend half a day in the bank because they're daily laborers. So
Hmm.
they could walk into any Kirana store that is powered by our technology, just deposit the cash there, and the money instantly will show up in the account of wherever they want to send the money, right? So domestic money transfer, it's a $20 billion market today, growing at 10-15%. That is a pretty important segment for us. Again, it is dealing with not people like you and me, but people who get paid in cash to some extent. Of course, you can also do a digital to digital transfer, but then you have UPI for doing that. So if I had money already in the bank account, I would use UPI, which is the cheapest form of transfer of money, right?
Hmm.
The other big proposition is the withdrawal of cash, which is either using your biometric data, which means I want to go withdraw money by just using my fingerprint and my Aadhaar number,
Hmm.
or using my debit card to withdraw money by a Kirana store. So you walk into a Kirana store and you get authenticated by your biometric and by your debit card, right?
Hmm.
And you can withdraw cash, and the Kirana store doles out cash like an ATM. There is no big machine. There is no fancy, air-conditioned shop. There is no real numbers to be punched. None of that. There's no PIN code to be remembered. None of that. Everything has been taken away. Everything has been replaced by the simplicity of your fingerprint,
Hmm.
right? Which you don't need to remember. It's there on your finger, right? That fingerprint, along with your Aadhaar card, gives you access to your bank account.
Hmm.
And that does the authentication, post which you can be paid money. And the Kirana store pays you cash. And then we do the settlement with the Kirana store to make sure the Kirana store is never out of money.
Hmm. Got you. So, one thing that comes to my mind is the risk management aspect. So, risk management is a critical aspect in financial industry, and banks work inside. The current model of banking is such that there is a very strong security and compliance standard in place, uh, and the bank employees, they operate in a certain manner, but the Kirana stores, they sometimes might not follow the stringent norms, and they might also use some malpractices as well. So how do you make sure that this sort of things do not happen?
Yeah. So firstly, we are a technology service provider, right? We are not a bank, right? So a lot of the checks and balances that we do, fraud detection, etc., is done on behalf of the bank, right? And we follow the principles that the bank wants us to follow. Number one.
Mhm.
Number two, technology is the best answer to try and avoid fraud, right? If your technology works and if your technology is solid, right, then you can actually eliminate a bunch of these things. Now, you need to then also replicate that with having appropriate service center infrastructure. Because if a customer feels that, I requested for 3,000 rupees, but this guy's only given me 2,500 rupees,
Hmm.
right? He has the ability to immediately call up a service center and report a problem. Also, he gets an SMS from us telling him that this is what has got debited from your bank account. Apart from the bank anyway sending that SMS, which some customers either take or they actually deactivate that service because there's a cost of bank charges, we provide that free of cost. So there are loops and processes that we've built around to make sure that there is no fraud. I mean, last year we did 8,500 crores of throughputs, right? We did not have a single instance of fraud,
Mhm.
right? So this is the technology works, right? And this year we will land up doing anywhere between 30, 40, 50,000 crores. I don't know how much. So far, we've not had a single instance of fraud where we've had any Kirana store or any customer call back and say that there has been, or any bank tell us that on the platform there has been an incident of fraud. So fraud detection systems are inbuilt into the way these processes work, right? And the authentication is actually riding on UIDAI's authentication processes, right? Because the fingerprint is matched in the bank account along with the UIDAI the Aadhaar database, right? So Aadhaar database is linked to your bank account. That verification gets done by the bank with UIDAI. We're on the flip side collecting the data and sending it to them. Or when the transaction gets authenticated, the Kirana store guy gives the cash. The physical transfer of cash is the place where there could potentially be a fraud. But that then gets checked by making sure that there is enough communication happening with the individual consumer and the Kirana store on what is the transaction that are being done. And the Kirana store is getting paid on a per transaction basis, not on the value of the transaction, right? So as far as he does more transactions, he's happy.
Gotcha. So, in your opinion, in the industry you operate in, even in the sub segment, there are many players in the market. Many players are using the Kirana stores as a medium to give financial services to the underserved segment. What, in your opinion, is the differentiator that sets Niyogin apart from these companies?
Yeah, so I think what I've explained to you is how the solutions are being provided, but we don't actually land up dealing with the Kirana store. Our philosophy is that we want to be the pipe owner. We want to be the API infrastructure provider. So the people that you hear of in the market who are dealing with the Kirana store directly and convincing them to use are customers of ours. So those are the enterprise customers that I like to work with. They work with the Kirana store and provide the final solution. The technology is ours through and through. So we become as an API infrastructure player, but I don't need to then invest in the sales resources of going and dealing with the Kirana store, training the Kirana store. All of those things are done by the intermediary who's bringing. So any entity which has a large number of storefronts, right, would become a potential customer to me, because each of those storefronts could potentially be a client for me. So take the example of a consumer non-durable distributor, right? They're supplying soap to, call it, 30,000 retail stores. That distributor could potentially be a customer for me, who would bring those 30,000 retail stores and want to deliver financial services from those 30,000 retail stores. And therefore, he is adding value to the lives of those 30,000 retail stores. I am making a new business proposition for that distributor who prior to this was only distributing soap, is now suddenly into financial services. And then I provide the entire tech stack for him to be enabled to do all of this. So we are actually an API infrastructure company. We are not providing the final mile to the retailer, or working with the retailer, or having a sales force of 2,000 people working on retailer by retailer by retailer, right? Because the footprint is so large. Like I told you, 63 million retail stores. To cover that footprint would take years and would take an army of people, right? Nobody has the money or the resources to do that. So one has to think through partnerships to be able to deliver this in a more effective way. So we become partners with people who want to deliver the solution, and we own the technology. We provide the technology so that the other people who are in the business with us can own the retail store and work with the retail store to provide them the solution. And we manage the service infrastructure, the delivery infrastructure, the technology infrastructure is totally managed by us.
Looking ahead, what are some of the future plans or initiatives that Niyogin has in store for future advancements in mission of democratizing finance?
So I think what we've become today, when I look back and I think about where we are going from here on, right, we are effectively becoming a fintech for fintechs, right? So you have so many fintechs, right? Take the example, right? Look at the fintech ecosystem, right? There are people who are working on efficiency. There are people who are working on better record keeping, people who are working on better procurement solutions for MSMEs, etc. Now, all of them have access to footprints, but all of them struggle on finding the right way to monetize the network that they have. Right now, what we've been able to do is we can work with each of them and provide them with a potential monetizing infrastructure, which can help them monetize the network. So someone who's got a great procurement platform is trying to get the SMEs or MSMEs to start buying goods on that procurement platform, right? And they make some commission on the procurement platform. To be able to then say that we are able to also, through that same procurement platform, also able to offer you financial services. We can convert your Kirana store into a micro ATM or into a AEPS center or into a DMT center. All that technology is available off the shelf, or it's a plug and play approach that we are able to offer. So when I look at some of the new age companies, right, I think a lot of new age companies are benefiting from what we are doing. So we today call ourselves a fintech of fintechs. Right, and helping fintechs monetize, which is a big issue right now with a lot of fintechs. With the whole fintech winter in place, a lot of people are now thinking about unit economics and how do they actually make money rather than just build market share. We are actually helping a lot of fintechs do that, and I think that's going to be the philosophy. We don't call ourselves fintech or fintechs, but the more and more I think about it, that's what we are becoming. We're also becoming a great TSP for banks because we are effectively extending the banks. Banks don't need to, in my view, I go to a bank CEO and I tell him, listen, why are you opening a new branch? There is a fixed cost infrastructure when you open a new branch or you open a new ATM. Why don't you use the existing infrastructure? Go have your bank accounts being opened, right? But let the servicing be happening not through a branch, but happen through the Kirana stores. And we will provide you the technology. So at one level, the problem with financial inclusion in the country is that you need to knock the cost out of the equation. Moment you start putting up a big physical infrastructure, a huge cost comes in. And then the cost of financial inclusion becomes quite expensive. If you knock off that physical infrastructure and use technology instead, suddenly financial inclusion becomes a profitable proposition for a lot of people, which is our mission right now. We are trying to do that. We're trying to convince people that get away from physical infrastructure because you can still serve your customers through the existing infrastructure that exists, which is the Kirana store.
Got you. Now we will talk a little bit about your personal journey as a CEO. So tell us what are the, I understand that the Niyogin started in 2017 and you joined somewhere in the middle.
Yeah, I joined in 2020.
Yeah.
2020.
So, what are the different challenges that you have faced so far while navigating this large ship of Niyogin?
Any new company with a new proposition, new strategy always requires, firstly, you need someone who has some level of vision because not everyone is able to see what can be, right? And you're not always right on what can be. So you need to tweak on what can be at all points in time, but you have to have a you have to believe in what you're doing. Because you as a CEO, if you don't believe, why do you expect your people to believe? And only way you can believe is if you've done your research and your work to be convinced about the market opportunity, right? So I think that's the first and the foremost step, first convincing yourself that we are operating in a space. This space did not exist 5 years ago, right? Because in 2014 is when these bank accounts got opened, so 7-8 years ago, right? After those bank accounts got opened between 2014 to 2017 and then MPCI got set up, that's when these opportunities started cropping up. 20 years ago, this opportunity did not exist. So a new opportunity coming in to be the first of the block, but to understand that many people will follow, what will create our differentiation capabilities? Why should we succeed as against others? What are the things we need to invest in, right? You need to convince your investors, you need to convince your employees, you need to convince yourself first prior to doing any of that, right? So that I think is the biggest challenge. Once we've got that thing sorted in your head, then it's about execution. Then you need to be surgical about execution. Now, surgical about execution does not mean you don't look at data points which tell you to tweak your strategy or tweak your way forward, because you got to be humble enough to understand that you may not be right all the time, right? So you need to be willing to look at data to try and tweak and play around with your strategy, but the mission cannot be played around with. Mission has to be very clear in your head. How you execute against that mission, you need to be smart about doing that, and be fleet-footed to some extent. So, and then convincing your people first, your employees, right, to join you, to work with you, to be a shared vision holders, right? Believe in the vision, I think becomes the biggest challenge. Once you've crossed that hump, then I think 50% of the battle is already won, right? Then you've got a bunch of team that is completely sold onto the idea. You are committed, they are committed, and then I think there is execution, and then it becomes a lot of fun.
So speaking of vision, I think you already said what can be. So tell us what the space you are operating in, the space of underserved Indian people who do not have proper access to banking and financial services. So what do you envision for this segment? What will it become probably in next 5 to 10 years or 20 years time? Because the way I see it, is a lot of magic happening in this space, and in last 3 years alone many new categories have evolved, like microcredit and the space you are operating. So what is the future? What will happen in next
think about it? 800 million people live in rural India. 600 million people live in urban India, but there is a significant portion of people in urban India who could also work with these services. If you ask me, this is one of the biggest markets in the world. No other global market compares to this ecosystem. Now, this is not a rich market, right? These are people who are at the bottom end of the pyramid. So you need to be efficient in how you deliver. I think we are just scratching the tip of the, we're just scratching at the surface on what the real opportunity is, right? And I think it's a bottomless pit, if you ask me, in terms of opportunities. Because when I think about new ideas, new propositions, how can we also serve this in urban areas? And then there are other global markets. There are markets like Indonesia, there are markets like the Middle East, right, which are very similar, like Brazil, which have very similar demographics to India, and that's where a lot of these products can also be brought in, because end of the day, it's technology. So from our company standpoint, I think there is a significant upside from where we are today, provided we continue with our execution with the surgical, precision that we've been doing so far. Right? I think that has to happen, and it becomes difficult as you become bigger and bigger and bigger. Right? You have more people. It becomes a bigger management challenge and all of that. So a smaller company can show much higher degree of surgical precision. How do you maintain and motivate people to make sure that you are having the best set of people in your organization, right? And you are attracting the best talent. I think that becomes a big challenge. But nevertheless, I think the future looks quite bright for us from where I see.
Hmm. Final question from my side. Tell us what you have learned so far in all these years of leadership and as a CEO that we can take away and probably apply to our ventures as a leader of a venture or
I
as a.
think, yeah, I think about this a lot because I talk to people, and I think the one thing which I think is very important is to not be afraid of making mistakes. I think a lot of us who come from corporate world are very scared of making mistakes because people are afraid of accepting failures. People think that their careers get ruined if they make mistakes. I
Hmm.
think the biggest learning comes from mistakes, right? And what you do with the mistake is very important. It's not about just making a mistake. How you learn from that mistake and how you sort of move it into your way of working or inculcate that into your way of working to make sure that you are learning from that mistake, I think says a lot about how successes will come to you down the line. So being afraid of making a mistake then makes you not take the requisite risks that you should take in lives, right? So I think that risk taking ability has to be supported by the ability to accept mistakes, and culturally we as an organization have to be okay, as a country have to be okay, or any organization has to be okay if our people make mistakes, right? The price, the classic example of what happened in Ford once when some guy made a mistake in a design of a car, and the company lost $10 million, and he went to the CEO and said, "Listen, I guess you want me to leave the company." He said, "Are you crazy? We just spent $10 million educating you. Why
Hmm.
would we want you to leave?" Right? So the mistakes have to be looked at as education, not as loss to the company. Loss is a short-term look at a mistake, right? The money lost to be thought of as education is the right way to see what a mistake is from a company standpoint. That's my biggest learning.
Awesome. So on this note, we will close the session. Thanks for joining us, Mr.
Thank you.
Tashwinder. And
Thank you so much. Good being here.